Hey everybody, it's Pete Carmasino here at Chaikin Analytics. This is our halftime show here each and every Monday on StockCharts TV. And I'm going to go over a few things today like we typically do. Just talk about the markets, what's happening a little bit in the front of the video here in the beginning. And then we're going to look at just some different ways to kind of combine our system, our power gauge rating system on the ACP platform, which is basically a plugin, super inexpensive. You should check it out. And what it does is it gives you a fundamental look of the stocks that we rate. Now, we don't rate every stock, but we rate a lot. We rate close to 4,000 stocks, if not more, depending upon how the rotation goes. So if it's a new IPO, it takes about a year for our rating to kind of build and be provided on the ACP platform. So if you've got a new IPO you're trying to track, chances are the technicals are going to be your best opportunity to kind of find areas of entries and exits. But for now, we just wanted to make sure that you understand that. We had some questions about that. So it does take about a year, and there are some new ones that are actually popping up now. And one actually came up on one of the scans that I saw today. So we're going to take a look at, again, overall market and just look at basically some names that have been sort of breaking out. I'm using the scanner from the ACP platform today, and it's sort of the point and figure triple top breakout, which is kind of significant. There aren't many names on that. I culled it down to a list that's just on the NASDAQ, just so I can get between 10 to 15 names, and I got about 14. So we'll take a look at those, and we'll just talk about the overall market here to begin with. I mean, look, the path of least resistance is still higher. I mean, that's kind of what we're seeing. We've been seeing. Not sure I'm convinced, but market doesn't care what I think. But we have to kind of take it for what it's worth. And just looking at the market today, I got charts on behind me. We rallied up to about 41.86, and 41.87 was an area of resistance that I have on one of the charts that I use. And we kind of rolled all the way back, pulled back, and now we're kind of recovering a little bit. So we're volatile, right? We got this new act that's supposedly called the Inflation Reduction Act, but to me, inflation is sort of a hidden tax, and then taxes are taxes themselves. And then if you're going to increase taxes, again, we're not going to get political, but point being is I think everyone's kind of in that mode of trying to figure out, is this helpful or is it not? Is it going to promote better opportunities in the market? Is it really going to reduce inflation? I don't know. We have to remember a few things about inflation in general, is that, what we saw on Friday was a big jobs number. Now, people are hearing about companies, either laying off or hiring reductions or, freezes and things of that nature. That takes time. It's not instantaneous, and it takes time, and there's a lag to the data. So there's also a lag to the effect of interest rates. And obviously we've seen oil and gasoline prices come down tremendously, and that didn't happen overnight, right? It took a little bit. Again, it's almost like a trend. But right now, there's really no great explanation for the strength other than a broad mix of a lot of things happening in the market all at once. And maybe, I think, again, we still might be on the low liquidity side. In southern states here in Florida, it's back to school week this week. And so that's going to start trickling into the market. Obviously, across the country, as schools go back to school at different times. I know in the Northeast, it's typically after Labor Day. Here in Florida, it's a lot earlier, but they also get out earlier. They're out of school by May in some cases. So just looking at the narrative, obviously the Fed narrative has come under scrutiny, talking about the peak of inflation and, again, how aggressive the Fed needs to get. And there, again, it's a lag. If you took a rope and you tried to whip the rope up and down, you'd get this wave of activity just from that first push on the rope, right? That first knockdown on the rope. What's going to happen is it takes time for that to get to the end of the rope. And that's kind of what we're seeing. Are we seeing the Fed sort of trying to kind of piece together a really strong sort of narrative about how they're going to thread that needle? Could be. I mean, we've said they were late and they missed it. They said that, inflation was transitory, but a lot of things have happened since then. So let's just dive in and take a look at the charts and kind of see what we see here. All right. A lot of what I just said here was kind of notated here, but I forgot to mention one thing. It's not all bad, right? we're still seeing opportunities out there. And when I show you this sector, the sectors at a glance here, I think you're gonna see what I'm talking about. I'm obviously, most people watching this are paying attention to the markets. If you're new here, that's excellent. Continue to watch not only our video, but other videos here, and try to find a sort of a theme, a pattern in what folks are saying. And we saw that big jobs number. We're seeing some skepticism in the numbers. People are kind of uncertain because they're hearing one thing, and a bulk of people, if you did a survey in our country, would be saying the economy's bad, but things are getting better. More people are working. It's really this push and pull. Personally, I think you could be seeing an opportunity where people are looking at the job market and saying, I'll pick up an extra job. If gas prices and food prices are going to be elevated, and we've dipped into our savings here in the last 6 months or so, maybe that's what's happening. Maybe you're seeing just new hires, but maybe those people are working in two different places. Again, I don't have that kind of data, and nothing is really up to date, that specific, minute to minute. For us, I think in general, it's boots on the ground. When we go out, we do things, we're seeing trends, we're seeing things change. We're seeing the price of gasoline, I said, in our area is down over $1.40 a gallon. I'm saying it's reduced by $1.40. That's a 30% move down in just the last month or so. So we were up at the 490s, 495 levels. Now we're at like 345 in cases. So that's pretty amazing. It's a different part of the country. Again, I'm in Florida. The East Coast, you're seeing a reduction, but not as much. West Coast is a completely different market. So we've got all these markets, but they're all kind of pulling in a little bit. They're not at their highs anymore. And again, I think you've got to mentally note what's happening in your own area and kind of see the trends and try to identify those patterns just from your own activity. It's just, it's just us, really. We're all out there, we're consumers. And if we're seeing activity and we're seeing prices come down, we are not alone. We represent a very big part of the demographic that's out there seeing the same thing. And so that has an effect, has a trickle effect. If you were filling up your gas tank and it was costing $80 to fill that tank up, and now it's costing $50, or $55, that's a big difference over time. Figure out how many times you fill your gas tank in a year and do the math, right? That's going to go either into the economy or savings. And I think that's what's happening. Again, I'm not convinced on the follow through 100% yet. We have some resistance levels that have to be dealt with, but we could be seeing a push higher again at 41.87. And again, it could be setting up a slingshot. A slingshot is where we get this big push up, we pull back because people think it's not going to continue, and then it just rockets higher. So that could be happening. Again, there's been a lot of short covering, but we don't know for sure. Again, that sector's at a glance. I just did a 6-month look back. Take a look at these. I mean, all of these are shaping up pretty interesting. There's the S&P up top here with the arrow. You got discretionary, consumer, communications, very tech weighted, those two, right? Also, XLE is kind of pulling back. Again, been under pressure, obviously. Staples, still okay, not great. Healthcare, a lot better. Technology, an incredible move in the last month or so. And obviously, industrials, materials, utilities even popped here. And look at financials trying to sneak up here with the 50 crossing over the 20 crossing over the 50 on the upside. That's interesting. It hasn't happened for a long time. And the last time it happened, it was sort of a fake out in April. But, this time it could be interesting. And obviously real estate's still looking pretty interesting. So every week I kind of look at what's happening here, rally 1, 2, and 3 on a weekly basis. We talked about the pre-pandemic high, but I look at the bullish percent. That's been increasing week over week. And now we're a full month that's 4 weeks here of increased bullish percent. That's really good, right? That's strong. We want to see it. Again, path of least resistance has been higher. No guarantees that's going to continue. And if I go back and look, this is last week's chart. I didn't update the chart, but I updated the numbers here. And I'm seeing about, as of the recording of this video, our average is about a 12% average on these 3 rallies. And that's up from 11.6 average last week. So obviously that's increasing and getting better. All right, so let's go take a look at the list of charts that are breaking out on that point and figure triple top. All right, I'm here on the ACP platform. Here's our plugin. I've got it loaded up and just trying to take a look. And so what I did was I did a predefined scan, right? I went to the technical scan workbench and I just added NASDAQ and I adjusted the market cap a little bit. And what I did was create a list and I put it in the ACP platform. Really cool. Then I just turned on the plugin. And away we go. So we can take a look at, Amkor, obviously a semiconductor name. Again, very bullish, big push higher, right? And has had, a pretty significant run here. If I go to sort this by symbol, I can see the change here, looking at just the recent trading activity and what's happening as far as what's happening by industry. But look at the industry. I'm seeing a couple of biotechs which have been on a breakout, raging really higher. A lot of software names and a couple of semiconductor names. So I also want, I always want to pay attention to that. You can look at the sector, of course, and kind of figure that out. A lot of tech, obviously, those semiconductors and software fall into tech. Not many materials, not many industrials, and a couple of healthcares. But not so much. Here's an insurer in the financial industry. But I like to just quickly look to see what am I seeing. So I'm seeing software and technology breakout, and that's obviously interesting. So if I look at performance, and I want to do like a 1 day or a 1 month, let's look at a 1 month. One of the biggest names has been ROAD, Construction Partners. Let's go take a look at that and just see what the heck's happening. They're up 6.5%. Obviously a benefactor of that potential Inflation Reduction Act. If it's part of building out any kind of renewable energy facilities or anything of that nature, it could be. It's heavy construction, it's industrial, but it's had a pop here. So let's just take a look at the Chaikin chart real quick, because I like to look at that. But going right to the rating, obviously what this is a bearish name, okay, that has just broken above its long-term trend. So why? Because it's neutral negative. You got to pay attention to that. This is an interesting chart. It's not quite there. Our rating is obviously negative, although they did have some interesting earnings. And so maybe that's the start of a new trend. I wish I knew from a fundamental standpoint for sure. But if I'm looking at a small cap name with a really high PE, and a lot of things are negative here on the power gauge, you can see that right here in the ACP platform, okay? And again, you can build your technicals and kind of follow along. That's interesting. I talked about a name that we just recently started to rate, and that's Robinhood. Now, again, technicals are sort of decoupling from fundamentals, all right? And we know that happens a lot, all right? Markets can ignore fundamentals a lot of the time in trading. And when you start to look at Robinhood, which is pretty amazing, the fact that they're obviously laying off people. Again, there's another narrative of people getting laid off and reducing their workforce and things. And obviously, that's going to reduce their expenses. But two things have happened here. Even though it's a point and figure triple top breakout, it is not on a relative strength change as far as we're concerned, the way we look at it. Okay. And the way we're looking at it is obviously versus the SPY. It's just not there yet. Money flow is getting better. It is overbought. It's above long-term trend. Earnings are good, but it's in a weak industry. Okay. And so we're just not seeing it there. And that's what I'm saying. You don't want to be sort of tricked into just following one type of methodology. You've got to look around and see what's going on. Here's Microsoft, obviously has been in an incredible trend higher off its lows from 250 to 280. And just another couple names like Broadcom, big names, and these aren't small, right? These are really interesting. Let's go look at AVGO real quick. Obviously, you can see that it's a neutral plus, so that means it's a bullish name that's under its long-term trend, all right? And this will probably have to end here on this one. If I start to look at this particular chart, very choppy, very choppy. Again, not something I like to see as a negative relative strength. So just be careful about the indicators you're using to find these breakouts. That's the point of today's video. Don't get trapped. All right, folks, like I said, time flies here when you're having fun. I'm Pete Carmasino. We'll see you next week here on Halftime on StockCharts TV. Take care. Have a good week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.